Hello everyone and welcome to the 2022 watch list preview. This is going to be a little bit longer video only because of the size of this watch list. And the reason this watch list is bigger is normally I would just stop at the inside setups right here. But since this is going to go a whole entire year, and I actually liked a couple of these setups that I found on the potential reversals, I went ahead and put them in here. So these here are all inside candle setups on the yearly, and these three are potential reversals to the downside. So let's take a look here and see what we have. Start with Boeing, and I've never done a yearly watch list before. And it's kind of tricky because on Thinkorswim I can't figure out a way to go longer time frames. I tried to do like a 5-year chart or a 3-year chart, and I don't think it's possible. I can only go 1 year. So it's hard to find something on a larger time frame to see how it looks. So anyway, here's what I'm looking at. I realize Boeing has quite a ways to go before it triggers, but we have the whole entire year for it. So yeah, this could happen September and still go into force here. So if we get it, it'll be an inside candle to the upside, and this would be our ultimate magnitude right here. The trigger is 278.57. We come down to the month here, pick up some targets. Our triggers here. Target 1 is going to be 297.44. Target 2 is 349.95. And the reason I put more targets in this than usual is because we have a lot of time to work on this. If this thing triggers, this one won't likely because it's far away from the trigger right now. But if this thing triggers the first week of January, we have 12 months for this thing to run. That's why I added extra targets on. Again, target 1 is 297.44. Target 2 is 349.95. Target 3 is I have to read it from up above, 367.38. Target 4 is 375.60. Target 5 is 382.85. Target 6 is 391 even. Target 7 is 398.66. And now target 8 is going to be way up here at 446.01. So that's what I'm showing for Boeing. You look at the year, it had a few good years, and then we had a shooter. In 2019, we had a shooter, followed by a big ugly red candle that tried to bounce back at the end of the year. So we'll see if we can continue that bounce and get going back to the upside. It may break to the downside. If it does, our trigger is going to be here, and our ultimate target is going to be here. Go back to the monthly chart to start picking up targets if you want to trade it to the downside. Intel, we have a inside shooter on Intel. You see, if you look at lower time frames, quarter hasn't been very pretty. Month, we had a decent month well, I shouldn't say decent month. It shot to the upside only to pull right back down. So I shouldn't call it a decent month, but but what I'm looking at it here, break below 47.87. Come down to the monthly to pick up some targets here. Target 1 is going to be this low at 45.24. Target 2 is this low at 44.24. Target 3 is going to be here at 43.61. If you want to keep riding it out, it keeps going down. Target 4 is here. Target 5 is here. Target 6 here, so on. So that's what I'm looking at for Intel. CocaCola. CocaCola, if you look at the year, been a really good year. Inside candle, but it's a nice big candle that is real close to all-time highs, closed real close to all-time highs. So we're looking for a break to the upside of 59.21. Our target is going to be 60.13. which isn't a big move. That's less than $1. But again, watch. We don't really have a broadening formation per se that we can draw off of. I mean, if we drew a broadening formation off of here, we could go here to here. That's a little bit of downward slope, not much, but a little bit of a downward slope. And then we could go here to here to get our upper end of the broadening formation. So you could use a broadening formation. Now you could draw it off the, you could draw it off the quarterly. Draw it off this candle here, but now your angles, you're going to be way up here. If you draw it off the monthly, what I'm trying to do is make it realistic. I don't want my broadening formation to be like this, to where my target's way up at $300. You could draw it off of here, 3 back to the 2 here, 2 back to right here. So you could draw it off of a lot of different places, but if we come back to the year, we're still similar situation. But you can use broadening formation. What I would probably do is come down to the weekly, and I'd look for a reversal on the weekly. Look for a reversal candle on the weekly. I don't think I'd go to the daily. The daily's too short of a time frame. Monthly, I don't think it's long enough of a time frame. On the monthly, if you wait for a reversal, you may end up giving back all of your profits. So I would go with the weekly on this to look for a reversal candle. And that's what I'm looking at for Coca-Cola. The next one will be Royal Caribbean. You look at the year. Inside candle, kind of right in the middle of the previous year's candle. So this one could go either direction. I'm going to look for it to go to the upside. I just think that I think it's pulled back enough. It may break to the downside. If it does, again, your magnitude is going to be down here. But I'm looking for a break to the upside. 99.24. Come down to the monthly to pick up some targets here. And actually, I went weekly on this one. The reason I went weekly was because there was such a huge move here. I wanted to have targets in between so I could have somewhere to put stops and whatnot. So, and there's also a gap fill here. We have a gap just past our trigger. There's a gap at 101 even. The gap fill is going to be 105.15. That's going to be target 1. Target 2 is going to be up here at 122.10, and target 3 is up here at 134.55. So that's Royal Caribbean. Walgreens, looking at on the year, we've had a few bad years in a row. Actually, 5 bad years in a row, followed by we finally got a green year. First green year in 5 years. So let's see if this thing can turn around now. So we're looking for a break above 57.05. Come down here. On the month, we're looking at target 1 here at 59.78. Target 2 is 64.50. Target 3 is 71.18. Target 4 is 74.94. Target 5 is going to be way up here at 86.31. So that's what we're looking at for Walgreens. Wells Fargo. Go back to the year. Inside year, pretty big green candle too on the inside year. So we're looking for a break to the upside of 52.57. Come down to the month, and we're looking for a target here at 54.04. Our next target is going to be up here at 59.20, and our final target on this one's going to be up here at 66.09. Walmart. On the year, kind of a hanging man, kind of a doji. It's kind of really not nothing. But it's an indecision candle. From a technical standpoint, I don't really think it's any kind of candle. but it's an indecision candle because it's more of a doji. So we're not sure which way it's going to go. It may pull back, come back down to test the simple moving average, but I'm looking for a break to the upside. 152.56. Come down to the month. We don't have much room to go to hit our magnitude of 153.66. It's only a $1.10 move. But again, same as earlier. Look at a lower time frame. Go down to the weekly chart. Look for a reversal on the weekly chart. Look for a trend line. Touch a trend line somewhere. Broadening formation. Maybe look for it to come back down, touch the 9 SMA on a shorter time frame, maybe the weekly or the daily. I wouldn't use the monthly or the yearly, certainly not the yearly, for a stop out, because again, like I said, you could have such a big move. I mean, this candle here is a almost $15 candle. If you use this for your stop, you're giving up huge gains. You'll probably end up red, probably losing all your profit if you wait on the monthly. You go down to the weekly. Yeah, this candle here is pretty big, but it's still only $5. So I would go to the weekly on these. XOM, fat fingers, and the reason I'm not pulling them out of here is because I did these charts on my laptop upstairs, so they're not in here. So look at the year. At least I don't think they're in there. I'll check on the next one. It would make it easier. Had some pretty nasty looking years in a row. I mean, yeah, we were green here, but in the last 7 years or so, it's been just falling down. Now we have a nice big green inside candle here, the biggest green candle we've had in quite a while. That's the biggest green candle we've probably had since 2006. Now we had big red candles right here, obviously. Right here, big red candle. But the biggest green candle since about probably 2006 or so, maybe even further back than that. So that looks promising, not necessarily for the price of fuel, but in terms of making money on this trade if it's going to bounce. So we're looking for a break above 66.38. Come down to the monthly, and we'll pick up some targets here. Target 1 is going to be right here at 71.37. Target 2 at 73.12. Target 3 at 75.18. Target 4 at 77.93. Target 5 at 79.94. Target 6 at 83.49. Target 7, 86.89. Target 8, 89.25. So we have some pretty steep targets there. Not in terms of dollar-wise, but we have 8 targets. Only, $17 move, which is percentage-wise is big. You're probably looking at 30-some% move if it gets there. So Roku, here's again, we were looking at the 2 up, 2 down potential reversals. So if we can break below this, which just looks like a pretty good candidate for it, we may not hit all these targets just because something moving to the downside doesn't always, long term, it's hard for me to play something to the downside long term, because in general the market goes up. So usually if I'm playing something to the downside, it's because I'm doing a scalp, something quicker in and out. But you never know. This thing pulled back, $300 move here. $300 move this year, $300 range. So obviously it dropped 300 because it was up here at one point and it closed here. So it's dropped almost 300 from its highs. So looking for a break below 190.23. Come down to the month, we'll pick up some targets. 190.23 our triggers right here. Target 1's going to be here at 150.38. Target 2 is here at 143.21. Target 3 is at 116.35. Target 4 is at $100.19. Target 5 at 79.38. Target 6 down here at 58.22. And I'm going to watch this one because back, I'm going to say maybe 2014, 2015. I can't say for sure when it was. But Roku was trading, I believe, around $170. And it ended up falling all the way to like $100. And I was like amazed. This is when I wouldn't say I was new to trading, but I was still pretty early on. And it was the first time I saw something that was as volatile and as common as Roku that fell that far. It fell almost, I don't know, 70%. And I was pretty amazed by that, only for it to shoot right back. Because when it fell, I'm like, it'd probably be smart to buy this when it's way down here. But I was so amazed that it fell so far. I'm like, I don't want to touch it because there must be something wrong here, because this thing, it just keeps on dropping. And within, it took, I'm going to say it took maybe a month for it to drop that far. Within like a week, it was already back at 170, and it shot all the way up to like 300 within another week after that. And I was like, dude, I should have listened to myself. So I'm going to keep an eye on this one because it's pulled back quite a bit. It may decide to run to the upside. I'm not going to rule that out, but I'm looking for it to break to the downside. And like I said, here's my trigger and here's all my targets. So let's see what it can do. And when it does decide to reverse, I'm going to look for reversals on a weekly or monthly, probably on a monthly. I'm going to look for a reversal on a monthly, and I'm going to try to catch something on that. I'm not going to be stupid about it. I'm going to keep my stops, but that thing can really move. So Disney. Go back to the year on Disney. Disney had an outside candle last year, 2019 or 2020, and then a kind of an ugly red candle in 21. So let's see if we pull back down and test this 9 SMA again. Possibly even hit the magnitude down here. So we're looking for a break of 142.04. Come down to the month. Look at some targets here. Target 1 is right here at 142.04. Target 2 at 119.81. And you see that's a huge, whoops, I'm looking at the wrong thing. 142.04 is a trigger. 119.81 is target 1. I'm actually reading it off of this because you see how these are all bunched together. It's hard to read them, so I'm reading them off of this as I go. So I'm pointing here, but I'm reading here on another screen. And I looked at 142.04 and I went, wow, that's a big move, and realized so I'm not sure what I just said, so let me start over. So again, the trigger is 142.04. Target 1 is going to be down here at 119.81. Target 2 is going to be at 117.23. Target 3 is going to be at, I missed the target here. Target 3 is right here, 115.35. Target 4 is going to be here at 112. Target 5 is going to be here at 108.02. Target 6 here at 98.86. Target 7 at 92.56. And ultimately target 8 at 79.07. Will we get there? Don't know. Maybe not. But be smart about it and move your stops. Chase your stops down, and make sure you lock in profit. PayPal. and I'm more aggressive on trailing my stops when I'm trading puts than I am trading calls. Not hugely, but if I'm trading something long term like this, I know eventually it's going to come back up. Even short term, I know eventually it's going to come back up. But it's you're fighting the trend on almost every single stock. If you're talking long term, looking at a yearly chart, it's going to be long term. You're fighting the trend on almost every trade. If you go puts or short, because the trend is typically going to be the upside on something that long. Now you'll have, this is the upside. Let's just pretend this is a yearly chart. This is a long uphill trend, and then we pull back here. But this could just be profit taking. It's not. I don't want to say it's a new trend. I mean, if this is for a yearly chart, yeah, you're looking at 3 years. That's a trend. But if you're looking at a shorter time frame, this is probably just profit taking. So anyway, PayPal. That's what I'm looking at here. And that's it for my watch list for the year. I don't know how many of these I will trade. Anything on this quarterly and yearly is going to be traded in my longer term account. I'm not going to trade this in my day trading account because these are things I could be holding for 6 months, 8 months. And because I'm not used to playing options on a yearly chart, I may just trade the common stock on these. Because I'll be trading in my other account, and that's something I'm willing to hold for 6 months, that's fine. I don't know that I'll get to do too much of this in my day trading account. I'm not saying you can't, but I know these options are going to be pretty expensive. If I'm buying options on a yearly chart, I'm going to be buying something at least 6 months out, minimum. Possibly even a year out. And it's not going to be cheap. The premiums are going to be pretty high on them. So, you could potentially be looking at $2,000 per contract on something. And I don't want to tie up that much money in my small day trading account. My day trading account isn't that big. Like I said in the video the other day, my day trading account is, I guess I'd call it maybe a slush fund. I put money in it, I take money out of it, I use it to buy stuff, buy toys. So I don't usually have a lot of money in there. I don't want to say I purposely don't have a lot in there, but it seems like the more that I have in there, the sloppier my trading gets. If I have 50,000 in there, it doesn't bother me to lose 1,000, so I get a little bit sloppier in my trading. Don't get me wrong, I wish I had 50,000 there. I don't, but I kind of intentionally sort of keep this account a little bit smaller. I shouldn't say intentionally. It's not really the right word, because I use it to buy stuff. Example, bought Christmas gifts out of that account because it's an account that I'm the only one that has control over, the only one that has access to. So people don't see what, my wife doesn't see what gets spent out of that. So if I buy her something for Christmas, if I buy it out of our joint account, she's going to see the charge on the card. So, just I spend it for stuff like that. I'm big into bowling, which I mentioned before. Some of the stuff there is not cheap, so sometimes I'll just buy it out of there. Buy a new bowling ball, or I'll enter a tournament that's $200 to enter a tournament. I'll spend it out of that. So the account balance goes up and down. But it's not like there's a lot in there. So I don't want to buy something that I'm going to be holding for 6 months, tying up $2,000 of my small account. So I'm just mentioning that because some of you that might be in a similar situation as me, maybe your account's not as big. You may not want to trade something on a yearly chart that you're going to be holding for potentially 6 months. So This stuff here, I'd likely be trading in my other account, my bigger account. And even then, I don't know, let's say just for example, all these trigger. And let's say I buy something 6 to 8 months out, and we'll say the average price is $1,000 per contract. That's 1, 2, 3, 4, 5, 6, 7. That's 8 different contracts at $1,000 each. That's $8,000 I have tied up. My concern would be if the market tanks overnight and all 8 of these drop 30%. That's a couple $1,000 loss that I'm not looking to, not real thrilled about taking on. So we'll see. Some of these, depending on how the spreads look, depending on the premiums, I may just buy commons with these and just hold them. Put my stops in and put my targets in and keep adjusting from there. So I'm going to play that by ear. Like I said, I don't really have experience. I don't have experience playing a yearly chart. I've never traded a yearly chart before. I've never scanned a yearly chart before. I've been trading for 8, 9 years, but I never looked that far out when I was trading. Now I kind of am because I'm working on my long-term account. I was kind of day trading out of that account for a while too, and decided I kind of made a decision. That account I was trading like Amazon, Tesla. The things were more costly. I was day trading the bigger things out of it. And I decided, you know what, it was too hard for me to try to keep track of both accounts. There was a few times where I lost money because I'd buy something in one account, buy something else in the other account, and I'd forget about the one in the first account, and next thing I know, I lost 50%. So I decided I'm only going to do long-term stuff in that account. Right now, my bigger account, I have all commons. I don't believe I have any options in there. You know what? I'm wrong. I bought Tesla and Disney calls. I think the Teslas are July 22, and the Disneys I think are January of 23. I bought those last week. So I do have those. I think those are the only two, and I bought one contract of each. Those are the only two options that I have in my bigger account. The rest is all commons. That way I don't really have to worry about it. I don't have to monitor it as closely. So just a little tidbit there, and I know this video is dragging on, but again, good luck. Set your alerts. If you're interested in following any of these, set your alerts. Make sure you honor your stops. I'll post these on Twitter. I'll take pictures of all these, post the links to the video, put everything up on Twitter. Make your own notepad, whatever you want to do, paper and pencil, whatever you want to do, or just paper trade them and follow along. It's up to you, or don't follow them at all. But I do hope that you watch this video. I hope you learned something from it. I appreciate if you like and subscribe. Only because this is my 7th video I've done this weekend. I have a sore throat. I've had it for a couple of days. And I actually took a break. If you've watched my other videos from earlier today, I had to take a break because my throat was getting too sore from doing all these videos. I was even contemplating not doing videos this weekend, for this whole entire week, or not the whole entire week, but I was thinking about not doing the videos, at least the weekly video, and not doing any of the recap videos from last week to try to shorten it. But I know there's a few on here that look forward to watching these, and that's what motivated me to go ahead and do it. My wife's not feeling real good either, so we're just kind of sitting at home today anyway. Sitting around. In fact, when I get done here, I'm gonna go upstairs and light a fire in the fireplace and just sit and watch Netflix or something tonight. So, but yeah. Anyway, just like and subscribe, comment. It just lets me know that people enjoy these and keeps me motivated to keep doing them. There's been a couple of times where I've thought, I think I'm just going to quit doing them. But I don't know. I keep doing them because I know there's maybe 5, 10 people on here that watch these every week. Uh, so I just try to keep doing it, but like them, subscribe to them, share them, something, and that makes me, it lets me know that it keeps me motivated to keep doing these. So anyway, again, thanks again for watching. I hope everyone has a great year this year. Let's make it our best ever, and we'll go from there. Thanks again, and see you guys later. Bye.